Welcome back. You're tuned in to Bazaar Morning Call. Well, to help us out with some more fundamental analysis, we have Amnish Aggarwal, Director Institutional Research at PL Capital. Hi, Amnish. Thanks a lot for joining in. Well, I wanted your view on these consumption/FMCG stocks. I'm looking at a UBS note. They have gone ahead. They have upgraded a couple of stocks, namely Colgate as well as Britannia. They believe there are enough tailwinds for the space from year on, be it on the consumption, be it on earnings growth, as well as it's a place you could hide given the global uncertainty. Would you agree? And what are your top picks?
Okay. Hi, Nigel. You see, as far as your consumption space is concerned, definitely, I think there is some sort of a stability which is coming in. I won't say that there is too much of a momentum right now. Most of the companies in Q4, they are not likely to show any marked improvement on what the situation was in 3Q. But in the backdrop of a normal monsoon, some expected benefits to come to the middle class from the tax cuts, and the inflation cooling down, there is a strong probability that the growth rates, particularly on the volume side, they will start reviving over the next few months. Now, if you look at, say, most of the companies in the sector, I think that they are all running at the peak margins, except maybe you can say cases like Britannia or ITC, or some of the, you can say, palm oil users, which earlier were reeling under very high raw material prices in the, you can say, last 2-3 quarters. So I think incrementally, is there money on the table to be made in the sector? The answer is yes. Will the stocks give you very electrifying returns? The answer is no. But at the same time, I think if you purchase them at the right time, I think many of the stocks have the potential to give you 10 to 15% kind of the returns over the next 6 to 8 months. Particularly if you look at, say, global backdrop, I think the Indian markets today are rallying because there was a big sell-off which was happening from the last 4 to 5 months. Now, if I look at on the other side of it, whatever is happening on the global macro front, I think there is likely to be some impact on the growth rate in many of these developed countries in particular. So to that extent, I think the sector looks good. And I think if the leading stocks can give you 10 to 15% returns over the next, say, 6 to 9 months, I think that doesn't look bad at all. Now, as far as our recommendations are concerned, Britannia is one stock which we are pitching right from 4,600. So Britannia is one. The second stock which we are pitching currently is ITC. And the third one, which is not exactly in the staple space, is Titan Industries.
Okay. So those are some of the picks on the consumer side. Got it. Amnish, hi, good to have you on. Well, the deal of the morning is in the wealth management space, and it's really booming, isn't it? And UBS is, I guess, money is now walking that talk. They're showing commitment, buying almost close to 5% equity in 361. And, there's a sort of cross synergies benefits as well. What's your sense? Because a lot of these stocks, the listed brokers and wealth management outfits, I mean, the stocks have already had a huge run, and many have recovered very well from the fall as well. Would you be a buyer of anything here?
You see, we don't have any hang on the numbers for these wealth management companies, but in the last few years, these companies have gained tremendously because markets were having a very good run. And there were a large number of family offices or even you can see the HNI investors who were actually going to these wealth management firms and buying their products, whether these were, you can say, AIFs, whether these were their PMS and all those stuff. So I think that momentum still continues. The last few months have not been that great, with the impact of which could be visible in the next 1 or 2 quarters. But the way the Indian, you can say, upper middle class is growing today, they want more customized solutions and all. I think this space in the longer term still looks interesting. But nonetheless, I won't be in a position to recommend any particular stock or a name here.
To tell you, sometimes anecdotes and stories work well to describe how well a space is doing, right, or how badly a space is doing. I'll tell you, this is a true story. I can't name the person, but this, veteran banker set up a new shop, his own shop, well-funded, etc. He wanted to hire an executive assistant, and he looked around, interviewed lots of candidates. Most of them were from the wealth management sort of space. They wanted to move, right?
Okay.
But he couldn't afford any. He wanted an executive assistant, and the problem, ESOPs. And these stocks have done phenomenally well.
Absolutely.
And then finally, he swore off. He said, well, I can't,
Can't afford the wealth
I
managers.
can't do it.
They're the
because,
ones who become wealthier.
Yeah, and that's the point. Not just the top guys,
Yeah.
but some of these, especially the Indian shops.
Yeah.
The cities and the UBSs, etc. of the world have been in India for a long time.
Yeah.
And actually, they were the only guys.
Yeah.
But now the Indian guys have really,
stolen a
been
march.
trailblazers, and they've run phenomenally well. And I think at 9:30 we have that discussion. So we'll ask them, whether it's as good as it looks like. It is, of course, as compared to a mutual fund business, a much more sticky business. You get the customer, and the customer kind of sticks with you for a much longer. That's well established. That's a discussion we'll be having at 9:30. But I mean, valuations and how to value these companies, all of that in focus with Feroz and Ashish at 9:30. Amnish, let's talk about BFSI, banking, financial services. What's your sense? Stocks. These norms, liquidity norms, right? The Bank Nifty is up 12% in the last 7 trading sessions. You think a lot of the good news is in the price already?
See, Prashant, we have to look at it in a different way. That if you look at the rally of last few years, banking was, I think, the biggest sector, biggest underperformer. It actually went nowhere. And liquidity was tight, interest rates were high. Now, although all these measures are not going to result in any significant change in their P&L or balance sheet in the near term, I think things are turning better for the banking stocks. And the second thing is banking has got the maximum weight in the Nifty, and whenever the FI buying happens, so banking is also an indicator of that. When FIs sell or they want to exit, then the banking is in the heat. And when they buy, then the banking actually gains. Now, at the current situation, when the interest rates are softening, India is now, I think, relatively better placed than many of the other large economies globally where the markets have done well. The banking, I think, looks reasonably good because the valuations today are not that bloated. They are even now at a discount to where they used to trade 2-3 years back. Yes, the easy 10 to 12% is now, you can say, off the table. But at the same time, if you are looking at, say, next 12 to 15 months kind of a view, I think still many of the leading stocks, they can give you maybe, say, returns in line with earnings or maybe slightly greater than earnings, because the next year the earnings are not going to be anything great. But given the fact that now the sector has got into the momentum, the liquidity is improving and the valuations are not that expensive. And if you look at on a relative basis across sectors, I think banking seems to be reasonably well placed even from now on. But yes, given the run up in the stock price in the last, say, month or so, one should be cautious and one should be now looking at more like your top names only.